Bitcoin is ready to make a big correction within the next 7 days. You need to be aware of this particular chart pattern so you can best prepare your portfolio if this does occur, which is highly likely. So if you like today's content, it's not the news I want to deliver, but if you like today's content, give me a like, subscribe, hit the bell notification. My name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on crypto. So let's dive into Bitcoin. All right, so I did a video on Bitcoin on the 30th of March, and there was a few key things that we said on the 30th of March, and it seems to be unfolding in a very textbook-like fashion. So the first thing that we said was we had this nice move to the downside, and then we look like we're getting this, what's a typical ABC zigzag. That's a typical, very common correction that we'll see in all markets and all time frames. And what we're going to focus on today is this part here, because we are now likely to approach this zone, which I identified in advance, and if it does play out like this, we're likely to get a move to the downside. And what we're using is something called Elliott waves and Fibonacci. And what Ralph Nelson Elliott, back in the 1800s, 1900s, figured out is that the markets move in predictable patterns and trends based on the human psychology. How's the psychological mood of every single participant combined? So it's mass herd psychology betting on the price. And these patterns unfold time and time again. So there's going to be three main things that we want to pay attention to: the momentum, the pattern, and the price position. And we're going to break that down in detail. Now, if you're brand new to Elliott Wave and Fibonacci, it can be a lot. And I recommend, everything is difficult before it's easy, but I highly encourage you, but not straight away, because there's important things I need to cover first. Take my free Elliott Wave and Fibonacci masterclass at the end of this training or this video, because I break down the three key rules of Elliott Wave. And that's important for today's video to really understand the basics of these patterns that unfold time and time again, whether it's Bitcoin or one of the other cryptocurrencies that you're interested in. So we are going to dive into a live chart now, and we just zoomed right the way in. Now the key thing, so it's exactly what we said. It still holds. We've got this nice movement to the upside, the movement to the downside, and then it looks like we're forming this third move to the upside. And most corrections have a minimum of 3 waves, and the most common is an ABC zigzag, which typically looks like this. I'm going to show you this. It looks like this, right? This line over here. Now, what we want to really pay attention to is this, what we're calling a wave C, right? This is the third leg of the correction. Now, the key thing that you want to be aware of is wave 3s tend to break down into 5 waves. And when they're identifiable and they're relatively clean, we want to be able to predict that ahead of time and see what's likely to occur. And what we can see, I'm just going to draw it here like this and draw this line here so you can really see it, is that this wave C seems to be breaking down to a very clean wave 1, a wave 2, a wave 3, a wave 4. So this wave 2 and wave 4 are mini corrections within this 5-wave sequence. And then we should more than likely get one more move to the upside to potentially complete this correction with Bitcoin. That means Bitcoin is likely to maybe hit $50,000, $51,000, but we don't want to get overly bullish because this is a corrective structure. We want to be really aware of that. And we also want to be aware of what will confirm that the correction is likely to be complete. And there's 2 things that we're going to cover today. So now let me just get rid of these lines over here and then this line over here, just so we can keep the chart nice and clean. Is what we have. I'm just going to get rid of these because we drew this in one of my private training sessions with some of my private community. When people take my masterclass, you can buy one of my courses. We've got private community. We do weekend training. You get more live access to myself so we can do live analysis together. But what we're going to do here is there's something called an end of wave 5 Fibonacci price zone. I actually cover it in the masterclass, so I'm just going to do it here. Is we measure wave 1 to wave 3 and we project it from this potential wave 4. Now, this wave 4 hasn't been confirmed yet, but the key ratios is 38, 62, and 100%. 100% is an outlier, but we can see that it really resonates with these numbers over here. So we've got this pretty clean zone, and we can move it to the right-hand side to know that we're likely to have one more move to the upside and then complete what looks like this 1, 2, 3, 4, 5 wave sequence. 5-wave sequence, which is very, very common. Now, if you want to see a 5-wave sequence, like if we just zoom out with Bitcoin, look at some of these 5-wave sequences that have occurred in the past. So we've got this 5-wave sequence, a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5, and then a correction tends to begin. So these patterns unfold on a macro level, so they're always like expanding, and on a micro level as well. So there's waves within the waves. And what we're really doing to keep it really simple is we're going to look at 3 things. First, we've looked at just kind of an update, but first we're going to really identify momentum. What's the momentum looking like of the market? Because they tend to unfold in rhythms. So I keep my weekly chart on the top left-hand corner over here. I'm going to do it like this. So what tends to be the case is if you can see this high over here tends to coincide with this high over here. This high over here tends to with a, you know, it's called a lagging indicator because we're taking past information, but it gives us a good clue on local highs. This high over here was coincided with this high over here, and then this next high would normally coincide with a momentum when it's going down. And what I mean by down is if I just zoom in over here and we just keep it nice and clean, if you're not used to momentum indicators, it's quite simple. When the blue and the red line are in this upper zone, there's a terminology called overbought, which means there's been a lot of buying behavior recently, and the momentum is likely to go to the downside. Now, by itself, that's not a good enough indicator for us to make decisions on, but it gives us a clue that the market should be having a local top, and we're probably going to see a sideways to down movement for a few weeks, and probably next week that this blue line will probably cross over below this red line. So that's a big clue that we're looking at. And then what we're looking at on the daily chart is pattern overrides momentum. But if you've got pattern and momentum telling you the same thing, that's what you call a confluence of events, where 2 things are telling you the same thing. It makes it a higher probability that that thing is going to occur, because we can only do probabilities and never certainty. So the pattern here on 2 degrees that we're looking for is an A, B, C, right? That's 1 degree. And then the other degree that we're really paying attention to is this 1, 2, 3, 4. And it looks like this final 5, which can be quite misleading because there's movements to the upside, but often it's the end of a correction. So to get some help, what we're going to do is we're going to pull up the daily momentum. And this is going to help us identify the top. It's an indicator. What I would anticipate is it will go up, and then on the next bearish reversal of this indicator, when the blue line crosses below the red, is more than likely going to coincide with a potential wave 5 of a wave C of this particular wave B. Now I've got a question mark because again, we're doing probabilities and never certainties. But what we want to know is, okay, what's the big deal? Because what tends to occur after a correction? Well, it's a continuation of the former trend. You go, okay, what degree, what are you talking about, Jiggy? What's the former trend? We're going to keep it really, really simple. So before this correction, what was the market doing? Well, the trend was actually down. So if you look at this, the former trend is down. When you get a correction, an A, B, C correction, if it does end up being a correction, you'll tend to get a continuation of the former trend. The former trend is this. And more often than not, the market will make a new low. A new low simply means the market going below this low point down here. So what we're anticipating is this. Now, if you've been doing anything in cryptocurrency for any length of time in 2021 and early part of 2022, you know that when Bitcoin moves down, it can panic a lot of the market. And a lot of coins, especially the younger coins, can get impacted through fear. So you want to prepare. So we might get a spike, just to summarize, a spike to the upside. And then what we're anticipating is a correction. Now, there's a few other things that we can, one other thing I'm going to just finish on is this. What would be the thing that would really conclude or clarify if it is a correction? Well, if the price goes into the range of the previous wave over here, because in the masterclass that I'm going to show you in a second, one of the 3 rules is, well, this would invalidate one of the rules. So if the price goes below this line, it tells us that the market is in a correction. This is a corrective trend, and that we should anticipate a lower low. That's going to combine with momentum. We've got pattern, and we got some price targets as well, and that makes it a very high probability outcome. So if you want to learn more about Elliott waves, and I highly encourage you to do so, because this, cryptocurrency and blockchain is here to stay. It's a very innovative technology, and we're at the very, very beginning. And these markets and trends are going to be reflected in the price over and over and over again. So I highly encourage you to take my free Elliott Wave and Fibonacci Masterclass. When you click on it, you'll literally get instant access. It's video on demand. I created this, and I break down the 3 key rules that you need to know with Elliott Wave in particular, what validates and invalidates Elliott Wave counts, and how you can get a real strong viewpoint of the market of what's likely to occur with high probability. That's the whole name of the game. So it's in the description link below. And if you like it, you can buy one of my courses. We've got some massive discounts happening at the moment. And there you have it. There you have it. That's my Bitcoin update. One of my students said, "Jiggy, I'm hoping you're wrong about this correction." I said, I do also. And the whole idea is that we stay objective, mechanical, and non-biased. So we're not allowing our human emotions of fear and greed. We want the market to make all-time new highs. We want to see that 6-figure Bitcoin, because it's going to be so optimistic for the entire market. But then we need to put our own biases aside, just plug it over there, and then we go, right, what is the price action telling us, which allows us to prepare in advance. If we do get that dip, what's going to likely occur with the entire market, to prepare in advance. So if you like today's content, like, subscribe, hit the bell notification. Let's finish with a quote. I'm going to go with chapter 1. Mr. MJ, Michael Jordan. This one's for TN. It's TN's birthday today. He's one of my team members. He's doing some phenomenal work in our company, and his son's name is actually MJ. So it says here, "I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed." MJ, right? There you go. So we want to keep practicing. Take the Elliott Wave Fibonacci Masterclass. Enjoy it. I've covered some really good information there. It's in the description link below. And again, it's really around understanding those 3 rules, and also how to combine Fibonacci price with wave structures. And everything is difficult before it's easy, but it'll get easier with time. All right, take care. I will see you very soon.